Hello and welcome to This Week in Bitcoin. A lot of exciting stuff happening, so let's get stuck in right away. And we need to start with the Bitcoin whales because they made headlines this week where a report, mainly US focused, I have to say, looked at on-chain data and ETF inflow data, as well as an interview with some whales who were willing to come forward, where they stated that whales have sold a lot of their Bitcoin and turned it into the spot Bitcoin ETFs. What I was curious to find out, could they just done an on-chain transaction and then, get the ETF shares? But apparently there has been no answer to this. But anyway, why doing this? There are two reasons. Again, this is very US heavy. So reason number one are tax benefits. There is a different tax code holding Bitcoin compared to the ETFs. There is also a different tax that applies if you trade said assets. For example, in the ETF, it's much more cost effective, it's faster because there is a third party involved for people to buy and sell multiple times throughout the day. And as long as they don't cash out, and I'm now quite generalizing here, of course, that's different and subject to every state people live in the US. But as long as they do this, it has a different tax advantage compared to just buying and selling Bitcoin. The second option is what a lot of them stated is that you are your own risk if you do self-custody. As a self-custody company, we're saying we prefer people holding Bitcoin in their own wallets and controlling their keys because this is essentially only how you hold proper Bitcoin. However, if we're talking about 1,000, 5,000, 10,000 Bitcoin in your wallet, sleeping might become uncomfortable and you become your own risk. What if you forget your 24 words? What if you forget the passphrase to the wallet, etc., etc.? What if you lose the wallet, if you don't have a backup? All of these things can become a risk. So rather than dealing with it and also diversifying into multisig, for example, whales started to flow into ETFs. Their choice, it's up to them. However, we support people in Bitcoin who hold Bitcoin in their own wallet with their own keys. And speaking of holding it in keys and self-custody, we also have some news from Trezor this week. They launched the Trezor Safe 7. I have one laying at home currently. I've been invited to the event in Prague as well. Thank you, Trezor. It was a fantastic event. And it is the first wallet with a open source secure element. The secure element essentially is a chip on the wallet. Every computer, every smartphone, if I'm looking at mine here, has one. And with this being open source, it's verifiable. Additionally, it's also quantum resistant, meaning if there is now further updates to patches to wallet infrastructure, which then become also quantum computer resistant, there is the opportunity for people to safeguard against that future. Doesn't mean that if a quantum computer is now trying to attack the wallet that it won't break. That's not what this means. However, it is an additional security step. And as a fellow self-custody company to another one here, great job, Trezor. And we're already looking forward to what other companies are doing. And lastly, we also have to speak about the price a little bit. And we had Bitwise's Chief of Research Europe, Andre Dragos, on the podcast once. The interview is in German if you want to go and watch it, where he talked about these models that they're reporting. And this week we have such a report where they actually took a closer look at gold allocation to Bitcoin and what would happen if 1, 2, 3, 4, or 5% would move their belongings from gold into Bitcoin. Astonishingly, with 5%, in theory, the price should be at over 240,000 US dollars per Bitcoin. Well, I always like these kind of research reports because they show the potential you have if Bitcoin captures certain aspects from other markets and certain portfolio allocations. However, in my opinion, they always get a little bit overhyped because then people start believing that this is the price target if XYZ happens. What Andre has also stated in the report and in a tweet is, first of all, this is not financial advice, and second of all, this just shows how early we are in Bitcoin. And especially considering that we last week saw multiple myths like, gold going down after the all-time high and Bitcoin going up. So there is a diversification from gold to Bitcoin. This is just nonsense because in the real world, this looks a bit different. Most people are taking out profits, living from it, reinvesting it into other asset classes. But what this report shows is that if you do this, and the more we speak about this and the more use cases are shown, the more likely it is that people will also take Bitcoin as a diversification asset. And with that, we're at the end of this week in Bitcoin. You know the drill. If you got questions, feedback, or just want to say hello, leave me a comment below, and I look forward to seeing you next week again.